Hello, this is World Talks, and I'm Jakub Kapiszewski. There's a growing concern about Europe's ability to innovate. Most technological revolutions over the past 50 years came from the US, and nowadays even China surpassed Europe when it comes to maturing and fielding innovative technologies. So the question is how to shake things up. And to tackle this very important question, I am now joined by Philippe Tibi, Professor of Economics at the École Polytechnique Paris. Hello, Professor.
Good morning.
Some people say that Europe is falling behind technologically, by which they mention it's an ongoing process, but I think it has already happened. What's your take?
I think it has happened because we have not used capital the same way as the US. And we must understand that the US started that 60 years ago, at least. And they have a lot of capital that has been provided by the pension funds. You know, the pension funds today manage over $20 trillion, so it's a lot of money. We have that kind of savings in Europe, but we need to turn savings into capital, which is the trick, and invest in companies instead of investing in bonds, which is slightly different.
So basically what you're saying is that all the Googles and Amazons and Microsofts in the US were possible because big institutional players like insurance companies, pension funds were able to invest in them at a very early stage of their development,
yeah,
right?
Actually, they invested in venture capital funds that select the project. And as you say, all the giants that we know today have been funded by venture capital. Microsoft, Apple, Google, Amazon, Tesla, and you name it. All of that has been funded by venture capital, which today, all these companies account for more than 60 to 70% of the market capitalization of the US market. So it's huge.
Okay, and is this the main difference between how the capital market in the US operates and Europe?
I think there's not so much difference, because at the end of the day, capital market, there are people that want to buy and people that want to sell. There are people with money and there are people with projects, and capital market are bridging these two categories. So essentially, it works exactly the same. The difference is that we are more money which is willing to take risk, company risk, than in Europe, and this is what we have to change.
Okay, and how to change that?
I think it's, you read the Draghi plan, it's exactly saying what needs to be done. So it is asking for 4 trillion euro over 5 years. So people sometimes are very frightened because it's a big number, but actually the savings of the European individuals in Europe are 35 trillion. So it is not like
that's the total amount of what's lying on bank deposits.
Yeah, banks or invested securities, but that's the financial assets of individuals. So we have the means. So the question is to be able to convert a part of this money into money that is going to be invested in venture capital, private equity funds, and the like. The key issue is to invest in companies, not in the depth of older companies, which is what we do too much, I think.
So we have this gigantic gold of pot,
yes,
and it has to be tackled or unlocked, as some would say, but there is unwillingness on the side of institutional players in Europe to do that.
Yes, because they believe that it's too risky, and some of them have given up the idea, or they have taken the idea that only the Americans can do it, which is wrong. So we need to change that, and our experience has been you can do that little by little, if I may. It's a lot of legwork of convincing institutions to do the right thing, which is to allocate their money in the right places, exactly the same way as the Americans. So it's not to be heroic on this and to take crazy decisions. It's just, diversification is the basics of portfolio management. So that really they walk the talk and allocate 1 to 3% of their assets to venture capital, and we'll see a very rapid change, I think, over the next 10 to 15 years. I don't say next year, it takes time. Everybody is talking about Google or Amazon or Netflix, but these companies are only 20 years old. Sometimes they are younger than that. Facebook was created 20 years ago. So sometimes, suddenly, like for the Chinese, you discover that BYD is a great company. But BYD has started 25 years ago and has gone exactly the same way. In China, it is a bit the same. They also have venture capital funds. The difference is that the money is bought by the state. which allocates money to venture capital funds. So it's not the pension fund that they don't have, or very little, it is the state. But in all situations, and we know that they are competing with us, and they are advanced ahead of us in technology, we are talking with countries that were able to allocate savings to venture capital. That's the common, ground between the two.
This actually brings us to the Tibi initiative, which is a program launched by the French government in 2019, which was exactly what we've been talking about in the studio, getting big institutional players like insurance companies and pension fund to invest 1-3% of their assets into venture capital, so this money can then flow into high-risk, high-tech companies in France. And you've been saying yourself that the program has been success.
Yeah, it's a relative success.
Success.
What has been raised so far is 15 billion euros. So we are not at the same.
50 billion euros
15,
in the space of 15 in the space of 5 years.
5 years. So the question there, we are not yet at 1 to 3%. So I think they are still upside. But the thing is to convince institutional investors that it is in their financial interest to do it.
And how did you manage to do that?
Because
you've been the banker yourself, you speak those guys' language. So.
Yeah, I speak the language, and also I speak about returns. And because I'm not a civil servant, they cannot suspect that I want to do things that the government wants to do. Of course, the government want to serve the public interest, and rightly so, they identify that technology serves the public interest. But in doing so, you must find ways to serve also private interest, because all these financial institutions want returns. It is their financial duty, fiduciary duty to deliver returns. So we have to make sure that we can align those different interests, and the only way to do that is to have a proper governance to control the project, and with the private sector being part of the governance. And I think that one of the recipe of the success is that people that allocate money are fully in charge of their decisions.
So we actually convinced them that there is money to be made in investing in certain.
Which I think is not far cry, because, look at the technology profits in the US. It's like in the 50s, you invest in cars, planes, electricity, that made money. And this is that was the technology of yesteryears. The technology of today is robotics, artificial intelligence, space, new nuclear, and the like. So if you don't invest in this, you are missing out, and you are going to buy this product to the Chinese and the Americans, as long as you can afford to buy them, which I think is quite important to understand, that you cannot stay idle, which I think Poland is a great example of a country that embraces growth and have changed totally, transformed the economic and social situations in the last 30 years because of this willingness not to stay idle and wait for the future to come to us.
Okay, we have a very similar problem here in Poland. There's a lack of venture capital, enough venture capital to invest in high-tech companies. But actually the government is trying to do something about it. 4 weeks ago it launched an initiative that has been modeled on the Tibi initiative. Do you think this model is going to work in Poland, or are there some forces at play that differentiate Polish economy from the French economy, and the impact won't be as big?
No, I think the impact can be as big. I think all countries are different. So I didn't come to Poland. That's my 5th visit. I must say I didn't know Poland before, apart from the books. I think what struck me in Poland is that the willingness of the state not to be complacent, of the government not to be complacent with the existing growth, which is an outlier in the positive sense in Europe, and to say that the economy needs to transition for older sectors, more traditional sectors, to new sectors as a way to fuel that growth. I think we share the same idea that you need to have private sector there. And before that, and it has been the case in France also, there was public money going there to lead by example, if you want. Because the private sector say, okay, if it is so good, why don't you chip in a little bit? Mm-hmm. But having said that, there must be public money, private money, and a strong contract between the two, so that both interests can be served, the public and the private interest.
So many economists in Poland have been saying that the engines of growth that have fueled the economy over the past 30 years are running out of fuel, basically, and that we need new fuel. And venture capital investments in high risk, potentially high return companies is being seen as one of the new drivers of growth. Do you agree with that?
Yeah, I fully agree with that. No, it doesn't mean that the portfolio should be only made of that. If it's 3% of the portfolio, it was sufficient in the US, because you're talking about a big pool of money anyway, which is the savings of people. So here you have pension fund. The nice thing with the pension fund, it has started recently, but the nice thing is that every year it goes up. And that's the benefit of some countries in Europe. France, unfortunately not. But if you look at Netherlands, which is not a large country, they have 1.5 trillion euro pension fund, which are not working in that direction at the moment. In Denmark, they have also, I think, 6 times the GDP in pensions. So that is a very strong target base, because the pension fund, they have time for them. They exactly know what they will have to pay the pension. So they can afford the volatility of the economy, which is not the case of other players who must deliver every year a fixed rate to their clients.
And this is why it's important, so important to get them on board. Philippe Tibi, professor of economics, École Polytechnique Paris, was my guest. Thank you very much, sir, for coming to the studio.
Thank you. It was a pleasure.
And this was World Talks with Jakub Kapiszewski. Stay tuned for TVP World.